Hey, what's up guys? I'm gonna be holding the headphones on my head just so you can all hear me much better. What we're gonna be going over in this daily primer is this. Ooh, let me see if you can see it. So this is it. This is the primed analysis process, the three pyramids that represent our logo, which is the past, the present, and the future, the near future to be exact. Now let me explain to you what we're doing. Since we are trading in the following ways, which is intraday, meaning short term, inside the day, we look for small pips on news trading, on key trading levels, things like this, or day trading, which is basically the 24 hours ahead. Meaning, if I open a trade at 10 a.m. on a Tuesday, I can hold it until 10 a.m. on a Wednesday. That would be the trading tactic of it. And of course, swing trading, where we stay in for a couple of days, which is something I'm doing right now on the DAX and WTI. We will go into the charts and I'm going to show, let me just lower this. We will go into the charts and I'm going to show you exactly what I'm talking about and how you would do this kind of analysis process. But the basic points are, the first pyramid is the past. That means we analyze the past by finding support and resistance levels, understanding the phases of the trend, things like this. Basically what's happened in the past. We use the Dow chain channel to find these key trading levels. We map them out over the last couple of months or in the current price action theme. So we understand more or less where the momentum is, where the trend is, down, up, or sideways. So we understand that. We understand basically the market phases and what's going on with price action, what has happened with price action. Next, we move into the present. And the present is the current price action, the tools we're using, such as where is RSI, what's going on with the EMA and the Dow chain channel, the middle of it. So that's the tools. Then we move into the candlestick analysis to understand, hey, we're waiting for price action to a candle to close. What's going on with this candle? So if we see a rejection at the bottom of a contraction, which leads to a key level, and we have candlestick confirmations, that's just a plus tick on our list of buy or sell or enter, not enter, and you put your ticks in there and you understand whether you should be buying or selling the specific trade. Next, we also find out the market theme. This is really important because we want our analysis to correspond to the market theme or indicate the market theme is changing and that a reversal is imminent or a new market theme is coming. For those of you who are with me for a while, let me lower this a bit more. For those of you who are with me for a while, you would remember us making a correct call and trade on the trade wars. When the Dow Jones, the US 30 was really on that uptrend and everyone was saying new highs, new highs, new highs, we were ready for selling. And in fact, we started building a big sell position, which earned us over 56% one trade. And we were shorting the DAX too. So those two trades combined made us like 60 something percent. How did we do it? By being ready for a new market theme. And then that tweet came on a Sunday. We were in the red big on that Friday close because the market just kept edging up, 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 up. Boop, market close. We were in. Market opens, big gap, short selling continues because guess what? The market theme has changed. There is a new market theme, and that is trade war. Anyway, also we want to understand the momentum. So what I'm looking at the DAX here, I'm just looking at the 1 hour chart and I see that we have a high, we have a low, we have a higher low, we have a lower low, then we have a new lower low, and now we're creating a lower high, hopefully. And we basically want to understand what's going on. That's the momentum of price action, to understand that, okay, if we're in a downtrend and our indications are to sell and the market team's with us, all we need is that final little candlestick to tell us, guys, or guy, or girl, hey, it's time to sell, baby. So that's the present. That's the middle pyramid that keeps everything together. And finally, the last one is the future, and that is the near future, because remember, we are intraday, day, and swing traders. In the near future, we want to understand what kind of news is coming out and what are the probabilities of what can work out. Remember, always check the upside and the downside. It's extremely important to be checking the upside and the downside. You do not want to get married to a trade and just say, hey, I'm going short, you just can't do that. You need to be ready for upside and downside. Now, on the future, we also want to understand the probabilities of how the market theme can affect the markets. So let me just put that in here. Probability of market team. So I'm going to have to put that in there. So the probability of the market team, for example, like the video I made about the coronavirus, I explained that there are two possibilities here, two major possibilities right now. One, a cure is found, which is unlikely but could happen, and if it does, we're going to see an aggressive market move. So we need to be ready for this, and remember that the chance of that probability is there. It's right there, and it remains there. Number two is that we could have a death outside of China, for example, from a person-to-person transfer. Some random guy sitting somewhere in the world or girl dies because of this virus. That's probably going to have a very bad effect on indices, oil, gold. Well, gold would be positive, but yeah, it would have an aggressive market move. Furthermore, if we have an escalation in deaths and cases, we have a pandemic, and then we have further selling. So you need to understand the probabilities of the current market team. If the current market team is that the Fed is going to cut rates, we need to be watching out for comments from central bankers, from the Federal Reserve, things like this, and understand what they could say. Use your beautiful mind and think. They could say this and could lead to this. So you need to be prepared for that. This is called tactics. Anyway, let me take you to the chart and show you what I mean. Right. Ladies and gentlemen, let's start this. So this is the DAX, what I was talking about, and I'd like to use this example here. I prepared it in advance. Just want to show you something important. So what we have here is a low, and here we have a high. Then we have a contraction, right, which creates a new low, right, a lower low, lower than this one, and then we have a high, which is lower than this one, and price starts moving down. What we can expect is that there's going to be a new low. The way to find that low would be take this and take that, okay, and you get 161. And you can see price action bouncing at this level right here. You could also take the top of the range if you like, and you can actually predetermine even more indications on where the new low could be. It's either 120% or 161, but you want to play with the previous high and this high and more or less judge what's happening there. So that's how you would do it, and then you have the next high. You can see it being a rejection at this level, and you have another selling indication. You get it? You have a trend. Now you have a next low, which is lower than this one, and then a high, which is lower than this one. And now we have a low down here, way down there. And now hopefully what we can see with the market team is that the high won't surpass this one, right? Because this is the previous high. And if that changes, if we have a new high, then what we're expecting is that the next low is going to be lower than this one. And the way we would find it is, let's say that the high is up here. We would go like this, based on the high being up here, and we would look at these levels for the possibility of the next higher low. And then we would say, okay, there is a high chance the trend is changing, if you get what I mean. So if we go to Euro USD, let me go here. I want to show you this. Let's go to the 4-hour. So what we have here is something similar. So we have the past, what we want to get into account. We get all the key trading levels of the past. And then we map it out and kind of understand what could be happening. Now we have the low here, we have the high, and if this is the low at 61.8, the next low, which is higher than the other one, so let me do it like this. Low, high, low, high, low. If the low doesn't break 61.8, this low, then we have a very strong signal for a strong bullish run, which should push to 161, even to the next key trading level up here. But the fact is that 161 lines up with this level here. I don't want to go into it far too much because these videos should not be that long. I want them to, to be short term and just really just grasp the idea so you guys understand more specifically what we're doing, what's going on, how we're doing analysis and so forth. But what you want to do is get the near past, so you go back a couple of months and understand where price action has gone. Look at the current pattern on the daily, for example. We have a breakout and retest of this contraction, and we might be in a new short-term trend. I hope this makes sense. I've explained it well, And in the new onboarding sessions that I'm about to start creating, this will be explained in detail. Thank you and have a beautiful Tuesday.